Bitcoin is seeing a little downside, but I would just say this, guys. To me, Bitcoin, and I said this last week, it remains bullish, okay? As long as it holds this 25,500 area, which is a downsloping trend line that even goes off my screen, but basically what we saw a breakout here. You could even look at this as being bullish consolidation. Now, it is down today, and what does that tell us, guys? It tells us that it's still a risk asset. Notice again, and this is really important, because so many people try to tell me that, oh, no, if we have trouble in the world, Bitcoin will soar. And the answer is very clearly that's not the case. Because, again, gold is going like this. Bitcoin is not down a lot, but it's not going up. So it is still a risk asset. We have to respect that. And therefore, again, it is coming in. But having said that, this to me is bullish potential consolidation. As long as it holds this area down here around 25,500, 600, it remains bullish.
Bitcoin's battle near $28,000. Bitcoin's journey this month has been a roller coaster. It began with a 4% surge, only to hit a roadblock at $28,000 due to overhead supply. Despite this, Bitcoin maintains a positive outlook. A bullish reversal above $27,000 could lead to further gains. A triangle pattern on the 4-hour chart and the 50-day ETA may support this. Bitcoin currently trades at $27,881, showing high sentiment as the SEC nears its Bitcoin spot ETF decision. A trader predicts a potential Bitcoin peak of $137,000 in August 2024 based on historical data. At present, Bitcoin sits at $27,952.35 with a slight 0.15% rise in 24 hours. It's trading within a medium-term positive channel, suggesting possible future gains. OpenAI CEO Sam Altman praises Bitcoin as a superlogical step for a global government-independent currency. He expresses concerns about central bank digital currencies, CBDCs, and increased surveillance. Binance CEO Changpeng Zhao, CZ, reflects on Bitcoin halvings, describing them as initially hopeful, then disappointing, before leading to new all-time highs. He cautions against assuming causation between halvings and price increases. Here's how much $100 in each of the following cryptocurrencies and stocks back at the bottom of the U.S. market. Investors who held Bitcoin since March 2020 would now have $523.24, while Ethereum holders would see $1,231.43, and Dogecoin investors would have $3,507.48. Cryptos have outperformed major U.S. indices since that time. Let's continue our enlightening discussion with Gareth Soloway.
If we look at the jobs data on Friday, we got 336,000 jobs added. However, that is faulty. It was not really 336,000 jobs added. Why? Well, as we can see, part-time jobs, full-time jobs fell sharply. So this number encompasses part-time and full-time work. Essentially, if you're unemployed, meaning no jobs at all, then you're considered to be in that unemployment level. If you have a part-time job, you're counted in here. Now, the data showed us that, again, full-time jobs fell sharply while part-time work gained. What we have to understand about this is this. Think about this, right? While there might be some people that are taking part-time jobs because they want to, generally people want to work full-time, especially when you have inflation where it is, right? I mean, how do you even make ends meet working part-time unless you're forced to because you can't find a full-time job? So that's key. In the last 3 months, 692,000 jobs, full-time jobs, were lost. So again, we're starting to see a picture here of an economy that is no doubt starting to weaken. So again, 692,000 jobs lost over the last 3 months. Now, again, overall, we've seen a gain in the jobs data. We've seen a gain. Why? Because part-time jobs have gained substantially. Okay, since June 1st, 1.2 million part-time jobs have been gained. So what we're seeing here is this rotation from full-time work to now jobs and companies saying, hey, listen, we're not ready to commit to you full-time, but we'll take you on part-time to help fill some holes. Ultimately, that is stage one of a jobs market that is weakening. Now, if we remember on Friday, we initially saw when I was doing this game plan, yields were beginning to spike, and then we saw them starting to come down. In fact, let's take a look at that right now. Let's go right into the 10-year yield. So on Friday, right, we saw, again, those yields beginning to pop and then coming back in. Now, here's your daily yield. So we can see very, very clearly that the yields, again, initially went up and we retested that topping tail high. Let me zoom in on that. Let's take a look at that and go closer. All right, remember, technical analysis dictates that a topping tail is paramount. This is the most important thing you pay attention to. That is a top until proven otherwise. What does that mean? Going into Friday, and like I said, in this very game plan, I said to you, listen, we were popping up here. We tested those highs. You have to have a daily close above to negate the bearishness of this topping tail candle. What happened? We pulled back on yields. Now, the yield still ended positive on the day, but interestingly enough, look at today. We're starting to come down. Interestingly enough, we know that yields are coming down because people are running for safety. Safety is in U.S. bonds, right? When you have instability in the world like we are seeing in the Middle East, that means that people are going to run to bonds. When they buy bonds, yields will be forced to go down. That's how it works. Okay, so we have that intact. Please understand that until proven otherwise, this is still your topping tail high. That is all that matters to me per the chart. Remember, being a technical chartist or a technician, whatever you want to call yourself, it means that you have no emotion. You look at the chart, you say that candle is a topping tail, as it is a bearish signal. Unless we close above here, you are now bearish. That's just the way it is. X plus Y, it's 1 plus 2 equals 3. Very, very simple stuff in that respect. All right. Now, I do want to show you the dollar. We are going to get into oil, guys. Obviously, oil making a big move overnight. But look at what we have here. Now, this is interesting today. So we know last week that the dollar topped out. I called that right here on the game plan, saying the dollar is now topping out. We had 3 down days in a row. Notice how on Friday initially, we can see the wick, right? And by the way, the white part on top, which goes up, where it doesn't have the color, that's called a wick. Below is called a tail. That's a technical analysis terms for the tail on top. It's really a wick and a tail on the bottom. Okay, so what we saw on Friday with the jobs number, it rallied and then we reversed on the dollar. The dollar actually fell on Friday. Now, we are seeing a pop today, and this is very interesting. The dollar is rallying today, right? While the yields, we just looked at yields are coming down. So again, the dollar, okay, is going up while the yield is going down. Now, that's very unusual. Usually the dollar and the yield have been rallying together. I mean, again, think about this chart, and this is the dollar chart, and remember, we just looked at the yield chart, which was the same chart. So why are these going inverse to each other today? And the answer, again, comes back to geopolitical instability of what's going on in the Middle East, right? So the instability makes people run to the dollar for protection. It's still the reserve currency. In fact, in the last 6 months or so, of all the transactions done, 48% of transactions around the world were done in U.S. dollars. That is a new all-time high, believe it or not. Now, again, you've probably heard of de-dollarization. You've heard of the BRICS nations trying to kind of get away from the dollar. We've heard about China maybe doing transactions in yen, or dollar, I should say, the yuan. But ultimately, it is still king dollar. And so what's happening here is people are buying bonds, which pushes yields down. They're also buying the dollar, which is pushing the dollar up. And that's how you get this inverse relationship in the dollar and the bond market.
Joe Rogan says Bitcoin is the most likely contender for a universal viable currency. This week, OpenAI CEO Sam Altman delved into the nuances of artificial intelligence AI on the Joe Rogan Experience podcast. As they conversed, Rogan articulated that the real fascinating crypto is Bitcoin. He then expounded on his belief that Bitcoin holds the most promise to emerge as a universal viable currency. That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.